this morning, we welcome Doug Freedman, who's an analyst for Broadpoint AmTech, and he has a buy rating for both Intel and AMD stock, and he joins us from our San Francisco bureau. Okay, Doug, nice to have you with us. Good afternoon to you. So what do you think of this move by AMD, first off, to partner up with Taiwan's Acer? Does it make sense?
Absolutely. So we're seeing Acer get into some new markets. AMD and Acer have had a relationship in the past and continue to. So Acer's been using AMD's chips in their notebook product line for quite a while now.
Now, AMD is actually trying to catch up with Intel because it lost market share because a lot of its products have been delayed. Do you think it's a little too ambitious for them, though, to say that they will get back on par?
Yeah, I mean, we're not actually looking for AMD to go, head-to-head with Intel per se on a product-per-product basis. What we're really excited about, especially in the server product, and you mentioned in your intro, we've seen new product introductions out of both AMD and Intel this week. Intel had their announcement here in San Francisco earlier today, introducing the Nehalem EX product. And the exciting part about these two products for us is that these two strategies seem to really dovetail together nicely. Intel's going to recapture the top of the stack, and in doing so, they've actually raised the prices for server chips. So the highest performance Intel product is going to sell for probably close to $3,000. We haven't seen that price point out of Intel ever since they lost the leadership in that segment of the market to AMD.
Okay, well, it looks like AMD is selling their chips for cheaper, less than what Intel is selling their server chips for. So why are you keeping your buy call on AMD? In fact, you just raised your target price to $14 US.
Yeah, that's correct. So as I said earlier, the dovetailing of strategy really plays in from the fact that AMD is selling what we'd call a full-featured product targeted more at the mainstream. AMD has never had a lot of market share in the server market in the 1U and 2U or 1-socket and 2-socket markets. So that's where servers are designed to go for smaller application loads. And this is a market that is actually the largest segment of the market and is the market that they're now targeting by offering a full-feature product without having to sort of pay up for all the features.
Well, Doug, you seem to know what you're talking about with AMD stock since you are the #1 ranked analyst on the shares, returning 130% with your stock call. So let me ask you about Intel, because you're also ranked #1 on this stock as well. You still have a buy rating. In fact, you also raised your target price to $29 US, which is still more bullish than the average analyst. What are you seeing for Intel here?
Yeah, so the call on Intel is pretty straightforward. We think that earnings leverage is underestimated on the street. And the reason why we get there is not just that the server market in general is going well and we're looking for servers to drive some of the above-average earnings, but it's more that Intel has a lead in investing in what we call 300-millimeter factories. These are large wafer-size factories, and these factories are going to be in place much longer than people expect. And we think as a result, the spending and earnings will be much higher than people expect.
Okay, Doug, nice talking to you. Doug Freedman of Broadpoint.